And good afternoon. Welcome into Market Talk for this Friday, March 4th. Thank you so much for joining us and making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web. Markettalkag.com is where you can find us. All of our Facebook, Twitter, Instagram, all of our social media links are there. All of our streaming sources can be found there as well. The latest news of agriculture and much more. It's all online, markettalkag.com. Well, we have more volatility to wrap up the week today. Plenty to discuss as we take a look at these wild markets. And here to help us try and make sense of all of it is our good buddy, Ted Seifried with Zaner Ag Hedge. Ted, great to have you back on, sir. How are you?
I'm doing great, Jesse. Thanks for having me on. It's always great to be here.
Well, Ted, I appreciate the time on a Friday afternoon as we take a look at these markets and just insane volatility. I think just to start, get your thoughts just on this market environment overall. Obviously, the Russia-Ukraine situation really is kind of the driver here with these markets right now, and
Mhm.
we just seen incredible volatility surrounding that. What do you make of just this market environment we're trading in across the board, really, right now?
Yeah, I mean, it's an incredibly dangerous market to be caught in limit up moves in wheat day after day after day. The volatility that we've seen in soybeans, it was last week we had the $1.10 range in one day after being almost limit up and then being sharply lower. Um, you know, yeah, the volatility is really outrageous. So, I mean, you have to be very careful. You have to really understand the different strategies and how they work, and you got really got to know what you're doing and manage risk. I mean, usually we're managing risk of flat price of corn and grains and big moves and fluctuations over time. Well, right now we have to manage ourselves as far as the positions that we're using and not getting stuck in things and so on and so forth. So uh for the most part, I've really scaled back on futures for right now. I'm using a lot of option strategies, things where I can help define my risk. But with this sort of volatility, it breeds a lot of opportunity. And those same option strategies that we're talking about that help me define risk have also been extremely profitable in short periods of time. So different climates call for different approaches for the guys that don't understand that, for the guys that haven't been able to change their approach to accommodate for these sorts of markets, that's when things get really dangerous. And I'm sure a number of people got hurt this week, especially in that wheat market, but really anywhere.
Very, very true. Well, let's talk that wheat market a little bit. That seems
Yeah.
to be the kind of the buoy, the center of all the volatility with Russia, Ukraine, obviously the front leader. Also, drought concerns in the U.S. I think that's another back burner issue
Mhm.
that's not getting talked about a lot. But I
Right.
mean, you look at the winter wheats. We've been locked up limit here a couple of days or close to it. Pretty much the same again today in many of those Chicago, Kansas City contracts. Spring wheat backed off a little bit, but still mostly sharply higher in a lot of those contracts. So, I mean, you look at the wheat complex as a whole, you look at these prices we're having, and I mean, just the fact that we might not see Black Sea exports or maybe even a crop planted
Yeah.
in parts of Ukraine, it just really making us making this wheat market a, like you alluded to, very dangerous to kind of trade in right now.
Yeah, last Friday it was seeming like okay, maybe they were going to come to terms and this would blow over and things would be back open again for this week, and we came in this week and realized that's not going to be the case. This is something that is here to stay. So, when you take Russia and Ukraine combined, it's what almost 20% of the world's exportable wheat. When you take that away, oh boy, all of a sudden the whole fundamental dynamics of a market shift. And then on top of it, and really what the feature was this week, in my opinion, Jesse, was you get you get large traders, commercials and funds in this case, that were on the wrong side of the market that are short. And then you have a market that is screaming higher, locking limit up, and they're stuck. So then what do? You can't buy at limit up. Well, there are some contracts that may trade at limit up, but for the most part, you can't just get out. Uh, so what does it mean? The only way to do that when you're locked limit up and you can't buy back is you gotta get out in spreads. So if you look at what happened between the May, December, or even the July and December spread this week, it was some wild, wild activity, maybe even more so than the flat price of wheat just being limit up, limit up. Uh, and to me, that was suggesting that these guys were working their way out of these short positions by spreading out, buying back the May and the July, and then selling the December, so that December had a few days where we were limit up in the front, but we were down pretty sharply in the back months, in December in particular. And then you'd see like Friday, December went limit up, and then by about 10 o'clock, it was trading lower on the day, and at one point, I think it was down almost 60 cents, and then went back positive on the day, and then back negative on the day. So these spread fluctuations, to me, is sort of a money flow issue more than anything else. So you add that into the mix. But what I'll say to that is, towards the end of the week, when you did see December, at least at times, start to catch up and start to push higher and follow along, to me, that's saying that maybe a lot of these positions have been taken off now at this point. So it makes you wonder if are we going to get a bit of a furious downdraft there in wheat, and we did see it in the July contract on Friday. But not in the May. At one point, the May got down. The pool of limit up bids got down to a little bit below 5,000. By the end of the day, it was back to about 160,000. So there's still buyers in the May. But you do wonder if maybe the short squeeze might be over if we get a bit of a setback. But even then, there's still good fundamental justification to be concerned that wheat prices still have to go sharply higher. I'm just looking at that December contract, wondering if it's really undervalued, because I feel like this is going to go on for quite some time. I think for producers right now, if you have wheat on hand to sell, maybe there's some really nice prices to sell up in the front. And then if you want to do some reownership strategies, there's some option strategies that you can use back in December, which might be a really sneaky way to actually add on top of some really good prices, or at least try to do that without taking any major risk. But wow, it is a wild, sort of unprecedented thing happening in the wheat right now, and unprecedented for good reason, because Jesse, when is the last time we were trading futures markets when one of the largest producers of wheat got invaded and was locked in a land war? I mean, this is not something we really have a playbook for. So we're writing the playbook as we speak.
Well, on the flip side of that, quartered soybeans, I'd say, performed fairly okay this week, despite the elevated price levels. I know beans on Friday that maybe took a little profit there, but corn as well. I know spot corn, we touched $8 at one point and then we backed off. But I'd say overall, the quarter bean markets did fairly well this week, and there's some varying storylines in both of those markets as well, on top of just the Russia Ukraine stuff.
Yeah, there certainly are, and there's some things that I think we need to be paying more attention to, like you were talking about, the wheat weather market. There's also a weather market in corn right now going down in Brazil that I haven't heard anybody talk about, and to me, that's a big concern. It's another La Nina year, and the expectations are that we're just going to have 86 million metric tons coming out of Brazil for their second season corn crop. If that doesn't happen, whoa, we could have to price ration corn at some point because of more exports coming our way. That's very much on my radar, but it's not something that the market's really looking at right now. I wonder if we transition to that at some point further on down the line. But one thing that we did pay attention to this week for both corn and soybeans was the idea that the Biden administration saying that we might see some EPA waivers because of high input costs for biofuels, and high energy costs and things like that. Sort of an inflation fighting idea. But man, it would be a really difficult thing for me to see that happen in a year where the Democrats are really trying to buy some votes. These are, well, look at the swing states, look at Iowa, for example. It's not going to buy them any favors in Iowa. So I don't know if they can really do that sort of thing. And I think the trade kind of looked at that with a bit of skepticism. And we heard about that on Thursday, and we really sold off, the highs on Thursday. But then we were right back to screaming higher Thursday night into Friday. And then finally, we did see some profit taking about midday on Friday, and sort of predictably so. I mean, after a really strong week in corn, it was somewhat expected, at least in my book, that we would see some profit taking by the end of the day. But I like the way we closed. Soybeans are the ones that sort of act weak. Out of the three, soybeans are definitely the weakest price action of the bunch, and very likely because they don't have as much to do with Russia and the Ukraine as say the corn and the wheat do. Obviously, veg oils is a thing, and soybean oil has been really very strong. Will probably continue to be very strong. But also remember that soybeans have really had the run. We had the South American weather run. Our expectations for that Brazilian soybean crop have come down almost 20, maybe even more than 20 million metric tons for some of us. So we realize that the soybeans have their own sort of situation, and when you have that focus really on Russia and the Ukraine, on wheat and corn, then yeah, you could say maybe there's some spreading against the soybeans as the short end of the stick. But I think more than that, it's just we're paying attention to other things. So the soybeans are just kind of left to kind of tread water for the moment. And we could even see a bit of a correction lower in soybeans if the corn and wheat were to have that correction we were talking about. But ultimately, that soybean story is still really very bullish. And barring some major macroeconomic change in the world as a whole, uh, we are not price rationing soybeans, Jesse. We're seeing it on a daily basis with these sales that we're making for both old crop and new crop soybeans. We are not price rationing our domestic demand in the form of the crush because crush margins are historically very good and will continue to be so when you look at the values of soybean oil, which has become a major part of that.
Mhm.
Partially it's because of inflation and the things that we're using with soybean meal, or the things we're using to make animals with soybean meal, and the things that we're doing with soybean oil. The prices of those are higher, and we've kind of proven that the public's willing to absorb that. But really, soybeans are kind of going through the same sort of renaissance that corn did with the ethanol boom in the 2000s, because soybean oil all of a sudden is a very valuable component of the crush and not just a byproduct. So to me, that means we've got a situation where South America had a short crop. We're seeing these export sales come in. We already have a fairly tight balance sheet, or at least from a stocks to usage ratio perspective in soybeans. And we're getting that even tighter and tighter with each day that we're seeing these export sales. If these sales continue on and the crush continues strong, and we start saying, oh boy, we're going to potentially run out of soybeans before the end of the marketing year, and we really do have to get into price rationing soybeans in earnest. We know we haven't done that yet. The price levels that we might have to go to price ration demand for soybeans is sort of silly. I can think of a bunch of words actually, but higher than what we would traditionally think because of this inflationary scenario that we're in, and because of the newly found value that we have in soybean oil.
I want to give a little time to crude oil. I know you like talking about crude oil and that's
Yep.
impact on everything. And I mean, this is just another situation with everything going on in the Black Sea and
Yeah.
crude oil. And you alluded to it a little bit with biofuels and everything else. This is a market that is screaming higher. And I've heard some crazy numbers on what we could see for prices of a barrel of crude oil right now, as we go
Yes,
through a
there are
couple weeks.
definitely some crazy numbers that you can see for that we can talk about for crude oil. Look, we've been in a bit of a global energy crunch for some time now, Jesse, and the issue with Russia really exacerbates that. Now, the U.S. to this point has not moved to ban Russian imports of crude oil. We actually import a fair amount of crude oil from Russia. Uh, and we haven't done that. And a lot of people don't understand that, and really don't understand why if they do get that. So the talk or the strength that we were finding in crude oil late in the week was talk that the Biden administration is considering the idea of disallowing imports of crude from Russia. We had been talking about that all week. I think a lot of that's been factored in. If that were to happen over the weekend or early next week, then I think you get your initial knee jerk spike higher, but then you get that sort of buy the rumor, sell the fact, profit taking effort that we usually see on something like that. But for me, Jesse, that would be maybe a buying opportunity for end users, for producers of grains that need to hedge energy needs, things like that. If you get a pretty significant pullback in crude oil at some point next week, based on the idea that we have a buy the rumor, sell the fact event, I think it's a good time to step in for that. I've been scaling up in call spreads on crude oil for quite some time in order to protect against this. I don't think we're done yet. And while I do think at some point we could have a fairly deep correction, I don't think that all-time highs in crude are off the table at all. I mean, 150 crude at this point almost seems Unless the issue with Russia somehow miraculously gets resolved in a very near future, I think 150 crude oil seems rather likely.
Ted, I want to give us a little time for livestock as well. That was just a brutal market today, whether you're talking cattle or hogs. But,
Yeah.
I mean, we've seen a big run up in these
Yep.
markets, and maybe we're starting to pull back a little bit, correct ourselves. I mean, what is your take on what you're seeing with livestock here as we wrap up the week and just have a really dismal day across the board?
Yeah, I mean, livestock have a problem with, higher grain prices, right? And the inputs that we're putting into them, over time might mean lower weights, might mean less animals. And in particular, I'm looking at hogs on that one. But in the short run, when your feedstocks become parabolic and start just running away from us, what's that going to do? It's going to push a lot of animals to market sooner rather than later. So then you have your contracts like June cattle and April hogs that really take that hard because we know that there's a lot of animals, a lot of production coming up front. So that was really kind of what was going on. On top of that, you have some pretty major concerns about the stock market as a whole, which breeds concern about domestic demand. You've got box beef prices coming down. So a lot of kind of negative things happening over the course of the last couple of weeks for livestock and particularly cattle. But I don't really feel like domestic demand is going anywhere anytime soon. We had some pretty decent export sales this week, so I think cattle, yeah, maybe in the upper 120s is probably a pretty decent buy, or at least I'm not aggressively hedging cattle anymore. I had been back over 140. Um, but yeah, I'm wondering if we're getting close to the end of this flush out in cattle, and then maybe your speculators come back in on that inflationary trade idea once again. As far as the hogs are concerned, that's the one that we had gotten up to some pretty lofty levels. Go back to the end of the last calendar year, and I had been kind of screaming at the top of the mountain that hog values have really gotten uh, to values that are well undervalued and needed to go higher. Well, then, we had a pretty significant rally. Speculators took notice. They jumped in on that as well. And then I started to think, okay, now we're getting overvalued. And so we were kind of due for a bit of a correction off the highs. Um, we saw that. We found support. We had a nice reversal higher day off of that. But we weren't able to follow through on Thursday. And then on Friday, we started to fail with cattle being down. That really kind of bled over into the hogs. And so we kind of pushed on them as well. I do wonder if you get a little bit more downside in hogs. But really, what I think we've done here over the course of the last not quite 2 months is just sort of defined a range that I think we could be sideways in for quite some time. I don't know if we have to eclipse the highs. I certainly don't feel like we need to go down and make new contract lows. So maybe this is just a range of value that we might be spending some time in for a little while.
I think another thing to watch as well, livestock markets. I think just ag in general, even influenza, getting more cases of that out there as well. I
Yeah.
know we got a case reported in a commercial flock in Missouri today, so that's another thing weighing on the markets too, Ted.
Yeah, of course, right. And I always wonder how much that should weigh on corn, right? Because bird flu. Um, when markets trade something, right? A great example of this is mad cow, since we're on the topic. But when markets trade something the first time, we have this really significant reaction because we don't know what it means, we don't know what it does, and oh boy, what is panic? Run. Um, but then we trade it a second time, or a third time, or even a fourth time, and we kind of become jaded to these sorts of things. We've kind of seen bird flu before, and if it isn't completely different than what we've seen in the past, you'd say that if there is any major impact on domestic demand for corn, it might be somewhat fleeting. It probably won't be major, or probably won't be long-standing. But I don't know. There's always uncertainty, and when you're having things push and pull markets and extreme volatility like we are right now, any little thing can cause for bigger moves. So yeah, we are just in a time frame, Jesse, where all these little stories can come in and create some big fluctuations and in thin air like we're in right now.
Very, very true. Well, Ted, great stuff today. I know if producers need some advice with all of these volatile markets in front of them, I know they can reach out to you at Zaner, can't they?
Yeah, absolutely. You can reach me directly at 312-277-0113. That's my direct line. Aside from that, you can find us on the web at www.zaner, that's ZANER.com. You can read a bit about us. You can also sign up for our Morning Ag Hedge newsletter. And then finally, if you are on Twitter, you can find me. I'm at the Ted Spread. I do talk about grains markets, livestock markets. I also talk about ethanol and cars. That's kind of one of my pastimes. But it's more of my personal side, personality, things like that, rather than just straight up commentary. But there is some of that as well. I can't help myself by talking about grain markets because that's kind of my favorite thing to do.
Definitely, definitely. Well, and I know next week as well, we'll both be at Commodity Classic, and I know
Yeah.
you'll be there. So if folks are going to Commodity down in New Orleans, they'll be able to stop by and see you at the Zaner booth as well, can't they?
Yeah, no, I'll be around, cruising around the floor. I don't like to stay put. So if you see me, say hi, and there may or may not be a corn hat on my head at some point.
Oh, we might have to see the corn hat in person.
Hmm. It's sitting right over there, just so you know.
Oh, buddy. Oh, buddy. With that, Ted Seifried with Zaner Ag Hedge. Thanks for joining us on Market Talk today. We'll talk to you next week, sir, down in New Orleans.
Absolutely. Thanks again, Jesse. Always a pleasure.
Ted Seifried with Zaner Ag Hedge joining us today on Market Talk. That's going to do it for the show on this Friday, March 4th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.